Well, so topic today is Indian insurance in the global scenery. Indian insurance in the global scenario. Say, in the year 2022, India was ranked as 10th largest insurance market in the world, with a premium volume of US dollar 130 billion, with 1.9% share in global insurance premium. And it is projected to become the sixth largest by the year 2032, as India's insurance market is one of the fastest growing insurance market in the world. So the growth outlook for India is based on strong economic growth, rising disposable incomes, a young population, increased risk awareness, digital penetration, and regulatory development. Means these are the factors contributing to the growth of the Indian insurance industry, and these are very strong factors like economic growth, rising disposable incomes, a young population, increased risk awareness, digital penetration, and regulatory development. So the insurance penetration and density is a question mark, because insurance penetration and density are two metrics, among others, often used to assess the level of development of the insurance sector in a country. While insurance penetration is measured as the percentage of insurance premium to GDP, that is gross domestic products. So the insurance density is calculated as the ratio of premium to population, that is per capita premium. So as per the Swiss Re Sigma report, the insurance penetration of lines for insurance sector in India is reduced from 3.2% in 2021-22 to 3% only in 2022-23. And the same for non-life insurance sector remained at 1% in both these years. So as such, India's overall insurance penetration reduced to 4% in 22-23 from the level of 4.2% in 21-22. This is very alarming. So in 22-23, the life insurance density increased to US dollar 70 from US dollar 69 in 21-22, whereas non-life insurance industry remained stable. So in 22-23, the insurance density in India increased from US dollar 91 in 21-22 to US dollar 92 in 22-23. So as per Swiss Re Sigma World Insurance Report, globally insurance penetration and density were 2.8% and US dollar 354 for the life segment and 4% and USD 499 for the non-life segment. That means overall insurance penetration and density were 6.8% and US dollar 853 respectively in 2022. And see, premium volume by region in the world in 2022 was like this. In advanced markets, in US dollars in billions, the life insurance business was 38.93 USD billions. Non-life was 61.07 billions. So total it was 100. But in emerging markets, the life insurance business was 52.32 billion, while non-life business was only 47.67 billions. In Asia Pacific, The life business was 59.87, but the non-life business was 40.12 billion. India alone, if we talk, life insurance business was 75.60 billion, but the non-life business was 24.40 billion only. So the total was 131.60 USD billions. And if we compare it with the world, then it was 28.1303 billion USD billion for life and 3969.20 for non-life. The total was 6782.83. So the insurance penetration in selected countries are reproduced from Swiss Re Sigma report, World Insurance report, and this shows a long-term trend in the insurance penetration and insurance density in India is provided that is showing the trends in penetration and density factors. The word in select countries is like this. So if we compare these figures, we will find that India is far behind as far as the penetration and the density is concerned. Far, far behind. Because the countries like USA, Singapore, Switzerland, Sweden, UK, Netherlands, Canada, Taiwan, France, South Korea, Germany, Australia, Italy, Japan, New Zealand, Spain, World, South Africa, they are far, far ahead of India. If you see which countries are behind India in density, these are only Pakistan and Indonesia. Similar is the case in the penetration. The countries behind in the penetration rate as compared to India are Brazil, China, New Zealand, Mexico, Argentina, Turkey, Indonesia, Saudi Arabia, Pakistan, Russia. They are certainly behind as far as the penetration rate is concerned. But the countries like USA, South Africa, Taiwan, South Korea, UK, Sweden, Singapore, France, Netherlands, Japan, Italy, Canada, Switzerland, they are far ahead in the race. Far ahead. So this position of penetration and density is still very alarming because the rate of growth is not very good. That is the reason Indian insurance in global scenario is not increasing very rapidly. We are presuming that today the India is ranking 10th largest insurance market in the world with a premium of about 31 billion. And we are projecting to become the 6th largest country by the year 2032. Because India's insurance market is one of the fastest growing insurance market in the world. But the growth outlook for India is based on the strong economic growth, rising disposable income, young population, increased risk awareness, digital penetration, and regulatory development. These will contribute to the increase in penetration and increase in density. Then only the real growth will come out. Because the general insurance penetration rate is far, far behind. It's very low, it is only 1%. While the life insurance penetration rate is still 3%. Our density rate is also not very good. The insurance density in India increased from $91 in 21-22 to 92 in 22-23. So there is no significant increase in penetration and density. Both are the part of growth. So India will find the good place or good ranking in the global scenario only when the penetration and density are increasing at a faster rate. Thank you.